While the auto industry is still struggling with shortage of semiconductors and other components, US car maker Ford Motors has announced to shut down production in India as the company incurred a loss of $2 billion over the last 10 years. The company arrived in India in the mid 1990s when Maruti Suzuki dominated the market. As the economy was opening up at that time, Indians looked for wider options. But Ford failed to fill in the void, and Hyundai, which came around the same time, took over the market. Ford was also late in terms of producing an entry level car, Icon, while Hyundai had already launched two entry level cars by that time. Ford's leadership was also not able to connect with its Indian stakeholders as the leader of the company was not in India, and this led to lack of clear understanding of the Indian market. Only two of its models were moderately successful in India, and the product launches were also too slow. In FY 2019, Ford made revenues of approximately 28,000 crore rupees and net profit of 211 crore rupees. However, in FY 20, the revenues dropped to 2,000 crore rupees and the company lost 5,400 crore rupees. Over the past 10 years, the company's accumulated operating losses amounted to more than $2 billion. Speaking about the volumes, Ford's market was less than 2% and the annual volumes fell to 41,875 at the end of FY21. Ford has current customer base of over 1 million. The company said that its customer support operations will continue to run in full capacity along with service, aftermarket parts, and warranty support. Accessibility of spare parts and quality of service will also be assured. However, the sale of existing models like EcoSport Figo, Aspire, and others will end once the inventories are cleared out. Ford is not the only US auto company to leave India. Harley Davidson announced its withdrawal in 2020 and General Motors in 2017, both because of mounting losses in production. Indian markets are dominated by Japanese and Korean car makers. Maruti Suzuki has roughly 48% of the share in the domestic market and Hyundai around 17%. Over the past 5 years, auto sales have registered a combined annual growth rate of just 1.5%, upsetting the plans of MNCs who heavily invested in the Indian market. In August 2021, the wholesale auto sales fell to 12% year on year due to shortage of semiconductors and high commodity prices. The effective tax rate on most vehicles touches 43%. This also added to lower demand for automobiles in India. As the Indian auto industry is slowly moving towards the electric vehicle segment, India needs the technologies to power these new generation vehicles. In the past couple of years, the Indian government has also actively engaged with MNCs to pioneer such vehicles. Ford in the US is in the process of pivoting to a digital future. Ford's retreat comes at an inappropriate time when India is aiming to move towards a greener future.